Hey everybody, thanks for joining this morning. Coming live from Orlando, Florida in the hotel lobby bar. Wanted to give a real quick update on where things are going, how things have been occurring. Apologize for not being around the last day to kind of cover a few of the happenings here on our market. But what I do want to do is kind of go through a couple different scenarios that we're looking at here. I think overall we're still looking pretty bearish, which is really great for accumulation because it gives us an opportunity to accumulate more units. So what I want to do is I want to start out pointing out that the last video that I did a couple days ago, we were just starting these two green candles, and we were kind of tapping out right here at the 7,500 mark, and I had made a mention that it didn't look like we were going to go much higher than that because we had been, tapping on this key Fibonacci retracement, which dates back to the 6K to 12K, or just shy of 12K run that we had, and I'd give an indication that it didn't appear that we were going to pass through that, and taking that candle that closed, the wick that I'm using there is what I'm using to sort of take a look at one of these potential downtrends. Of course, I've got a much larger downtrend that extends from the 12K run down to basically where we are, and kind of trying to take us down to an apex on this wedge that we were potentially forming. So we've got, of course, our rejection that happened here about 7,500. You can tell that, while it would have been really nice to have had some of these additional profits, staying out of the market was a good decision because, we actually lost 2 days worth of profits. If you were to have even purchased here and didn't sell because maybe you thought it was going to continue to rise, if you didn't sell, if you didn't short, then you basically just lost all of your profits, and you're actually now worse than at square one if you happen to purchase in that particular area. So now where are we? We had rejection at this Fibonacci retracement, and now we're seeing some potential support at the 6,600 mark. You can see the candle that we have is being lowered, and we've got a red candle, right? So this is the third consecutive day that we've got a red candle. We're hitting this Fibonacci retracement based on my projection of that 9,200 down to 5,000. So depending on what happens here, I think that we are going to continue to go down. A lot of people are saying, around April 15th, something like that. We've got another week to go. I do tend to agree with that. I do think that we are going to see some downward movement, potentially down to this 5,900 mark. I do think we're going to see another rise, right? So, I'm going to look to maybe sell a little bit of my position so that I can continue to accumulate down here around the 6,000 mark. I do expect there to be another sort of push at 6K. I don't think it's going to be a rise to 12K, right? I don't think 6K is the floor this time, because if you recall, all of the support that we had at 6K isn't gone, but there is definitely a lot of sentiment in the market that says that we need to be going lower than 6K. And I do agree with that. So even though we're going to possibly see a push at 6K, it's probably going to get rejected. And so we're going to see another drop potentially. And this is going to take us really close to where this wedge reaches its apex. And you can see here there's a potential bull trap that could occur depending on which wedge you're looking at, right? So if we see it happen this way, we come down here, we actually end up right around 5,500. There's a potential that this could be a bull trap mixed with a bear trap, and that could take us down to 5K. But right now, 5,500, that is potentially going to be my safe entry point. So that's what we have. Hopefully this was helpful for you. And let me know if there's anything else you would like for me to take a look at. I do tend to sort of stay away from Ethereum and Litecoin and some of those other cryptocurrencies because they all tend to follow the price of Bitcoin. Some of the other smaller market cap coins do tend to sort of hold their own, which is quite nice. But a lot of them are tethered somewhat to the price of Bitcoin. So, if one wedge falls, then all of the wedges fall. There was some talk earlier about we had a triple combo wedge failure, and yeah, when you've got all of these coins that tend to favor the price of Bitcoin, when one fails, they are all going to fail. It happens to Bitcoin Cash, it happens to Litecoin, it happens to Ethereum, whenever it happens to Bitcoin. So, that's one of the reasons. Excuse me. That's why one of the reasons are that I do a lot of my trading based on Litecoin, because it does follow the same price as Bitcoin. So when I get some downward motion on Bitcoin, the downward motion tends to happen on Litecoin, but my potential for gains on Litecoin are more favorable than on Bitcoin, because my Bitcoin value is always going to remain as my Bitcoin value. That will only increase if the price of Bitcoin increases, but the Bitcoin value of Litecoin has potential to increase, similar with Bitcoin Cash and Ethereum. So keep that in mind when you're doing your trading. So if you ever have a question, why do I have such a such a holding on Bitcoin Cash or on Litecoin, it's because the name of the game isn't just to increase your USD value, it's also to increase your Bitcoin value over time. And so that's where my goal is. So hope you enjoyed the video. Let me know if you have any questions. Feel free to leave some comments and all of that. I'll do my best to answer those for you. Have a good day, everybody.